Center Network, EVN, and I'm the project manager of BIC Africa, working with Robert Sanders and the rest of the teams on this exciting project. As Robert mentioned yesterday, BIC Africa organizes the first of a series of training activities together with the delegations of the European Union in Angola, in Ethiopia, in Madagascar and Somalia, and with key experts in the field of business and tech incubation. Sessions yesterday were focused on first approach to business incubation, and we will be covering today the area of access to finance with two experts that will provide presentations on how to facilitate funding for client companies and how to link with investors funding the innovation community. Tomorrow will be the last day of this first online training, and we will focus on how to develop a vibrant ecosystem for business incubation. And we will also have a panel with business incubation practitioners to address the main challenges faces in the day-to-day activities related to running an incubator. Please, for this panel, send us any questions that you may have to the email address you can see on the screen, hello@bic-africa.eu, and we will try to answer your questions during the clinic. And please feel free also to send us any comment, feedback, and ideas for future trainings that you may have. Today, let's start with the training, and the first session will focus on how to facilitate funding for client companies. For this, we have with us Ben White, that has been venturing into the African technology and media space since 2003, launching africanews.com as one of the first Pan-Africa websites. Ben is a co-founder of AfriLabs, a Pan-African association representing more than 250 innovation hubs. And he's also an angel investor and co-founder of the African Business Angels Network, ABAN, with membership of more than 80 angel investing networks across Africa. In 2007, Ben founded BC4A, the leading online platform showcasing more than 20,000 high-growth, high-impact entrepreneurs. Ben, thanks for being with us today. The floor is yours.
Thanks for that. Nice to be here. Let's see here, just sharing my screen. We have done sessions like this before. Sometimes it's spread over multiple sessions, several weeks. So just try to share a selection here with you all, assuming that this is one of maybe more conversations to be had. So please see this as a snapshot, as a bit of an introduction, and also with enough time left over for hopefully also to receive your questions and to maybe also have a bit of a conversation here with the group. And these materials are available after the session, so you don't have to worry about whether or not you have access to this. VC4A, of course, is an online resource. It's offered free of charge. It's always available, vc4a.com. So all of these materials, they're at your disposal today, tomorrow, the day after tomorrow. So yes, please connect and engage with us. And you can also always reach me at ben@vc4a.com. So you can also contact me at any point if you want to know something or have a question or would like to discuss any kind of collaboration or partnership. Can you see my screen okay?
Yeah, we can, Ben. Looks great from here.
And you can hear me okay?
Perfectly.
Great. Let me see if this will change the next slide. So this is just recapping a bit of the introduction. You know, I came into this space in 2003, and really there wasn't so much going on back then. But you see that the industry has grown significantly over the previous period. But where it is still very much, you know, focused on a few key countries and few, you know, key ecosystems. And I think one of the biggest challenges now, moving forward, is to see how we can basically spread the industry to all corners of the continent, and also making it more accessible and more inclusive, providing even more people with access to the resources and support that they need and deserve. And I think that's where you as a community come into the picture, because you're on the front lines. You're actually building these spaces, you're building these communities, and you're supporting these individuals, which is the critical work. So let's start with why are we trying to support entrepreneurs? Obviously, you know, with the hubs that we have, you know, we're trying to incubate ideas, we're trying to accelerate them, and we're trying to scale them up. And the reason we're doing this is because they have an innovation that you know, has the potential to change a system, which can impact thousands, if not millions of people. And that's where we're able to drive change in our systems. And we're really talking about innovations across the spectrum, right? From healthcare, education, infrastructure, you know, all of these critical sectors where innovation has a role to play. The path of a startup, of course, is not an easy one. You know, you're starting out, usually having to invest a lot of time, a lot of energy, sometimes a lot of money into developing a new product or a new service. There's research and development. There's trial and error. There are things that you have to test, things that you have to, you know, iterate, redesign, try again. You know, all of that costs time and money. And there's all kinds of reasons why a startup might fail. It can be the, you know, team falling apart, could be timing, you know, the product or the service is too late, could be that it's too early, can be that, you know, competition, can be regulation. There are many reasons why most startups actually never make it. Of course, in our situation, we're talking about, you know, trying to do this in a city or in a country where there might even be more challenges. Maybe the infrastructure is incomplete. Maybe the regulations, you know, it's not completely transparent or you know, well understood how something works. Maybe it's not even regulated yet. Maybe there are, you know, other challenges, you know, that these startups have to overcome. So in, you know, Amsterdam or San Francisco, it can be hard to build a startup, but try to do that in Hargeisa or Dar es Salaam or Addis or Abuja. You know, in these places, the challenges can even be compounded. And so the support that entrepreneurs need, the time that they need, the resources that they need, sometimes is even greater than what it would be in an established market. And we're dealing with realities here. You know, there's no point in trying to sugarcoat things. You know, these are three of my investor friends, and sharing their views with you. Khaled Ismail of Him Angels, one of the most prolific angel investors in the Egyptian ecosystem. You know, he says too many incubators and accelerators fail. They are not doing their job. You know, they're not providing the mentorship and the guidance that startups need. at the early stages of formation. And part of what Khaled is arguing is that, hubs are too focused on themselves. They're too, worried about their own business model, that, and whether or not they can keep the lights on, that they're not actually providing the companies with the support that they need. And they're not doing their job. They're not living up to their role. And so, many hubs are failing if you take this view. Gregoire from Orange is saying, look, ideas, PowerPoint presentations, that's not going to cut it. To some extent, the threshold, what investors are willing to look at, what investors are willing to invest in, the level of quality, the level of traction actually has to be higher than in a sophisticated market. It's kind of counterintuitive. On one side, we're saying, well, look, you're working in a system where there's even more challenges. It might take you more time and more money to actually get to a place that the business is working. And at the same time, the investors are saying, we're not going to talk to you unless we see all of these elements are in place. And really what Gregoire is touching on is traction. We actually need to see evidence that the business is serving its customers with its product or its service. And we need to see that its ability to sell, its ability to bring in customers, that is accelerating, that is, that those numbers are, improving in a tangible way before investors are really going to engage. And then Tommy Davies, our president of the African Business Angels Network, says the expected revenue levels are continuing to increase, and it's unlikely for a startup with less than $100,000 in revenues to get seed investment nowadays. So I don't think this is necessarily new information, but when we are managing our hubs and when we are managing our portfolio of companies, we have to look at them critically, and we have to try and understand in how far they meet these criteria. And if they don't meet these criteria, does it make sense to try and be connecting them to investors? What are the expectations that we are setting for the entrepreneurs in our communities and for ourselves as community managers? So what is our role, right? What are we doing, and what is how are we creating value? I like this definition. We are reducing the cost of launching a startup by as much as 50% and providing the mentorship, business connections, and fundraising support. 50%, right? This is a really tangible number. So we can measure this. We should know how much time and how much money it costs to build a startup, and then look at our programs and look at the support that we are offering to be able to understand, are we making this 50% easier? That is the value that we are supposed to be creating. And it's not just about cost, it's also about speed. It's about time. So an entrepreneur is assessing, our programs all the time, and they have choices. They're trying to understand, if I come to your program, are you going to save me money? And are you going to save me time? The more money and the more time you are saving for entrepreneurs, the better applicants you will have. The higher quality entrepreneurs and ventures will come into your program. And the higher the quality, the more likely they will be able to connect with investors, and the more likely you will have success stories graduating from your programs. So if we look at the cycle that a startup goes through, right? Here on the left, you have research and development, you have the technology transfer, you have the launch of the product or the service. Then you go into this process of trying to commercialize the business, where you start to find your customers, and you start to develop the revenues and the incomes that your product starts to work. The light green on the left, that's kind of where the hubs, the accelerators, the incubators sit. And all the way on the right, that's where the investors like to, invest their money. So there's a gap. There's a gap that exists between when the companies are supposed to be graduating from our hubs and when they are ready for investors. So a lot of times hubs will try to bring investors into their space and say, look, these are our entrepreneurs, meet them, invest in them. And the hub is disappointed, and the entrepreneur is disappointed when the investor doesn't invest. And the investor is also disappointed because they've engaged the hub, but they're not finding companies that have that commercial traction, that they need to place their money. So how do we fill this gap? There's different ideas, different theories, and different sort of ways that hubs across the continent are trying to address this. If you ask me, I think one of the critical areas is in mentorship. Mentorship is a way of engaging people from the private sector who, have to some extent already a successful career behind them. They might even have a little bit of money, but they most certainly have experience and they have network. And a lot of people from the private sector are trying to figure out how they could get involved in, this exciting startup industry. They hear about these startups, they hear about these entrepreneurs, they read about, these companies that are having this, huge success, and they're curious, but they don't necessarily know how to get involved or where they can engage. And so mentorship is a way for them to basically take a role and to be part of helping entrepreneurs grow and develop their businesses. And mentors can make introductions for these entrepreneurs and help them link up or connect to opportunities in the private sector, which is where the companies are also able to find those contracts and to get some of that first commercial traction that they need. That starts to build that business case for investment. So if you ask me, if I was managing a hub like yours, I would say, mentorship is a critical piece of trying to bridge this gap. In terms of, our further engagement with the entrepreneurs, it's I think maybe fourfold, right? But one is really trying to help the founders understand where their priorities are. Trying to set out, what are the strategic mission 1, 2, and 3. Entrepreneurs have to deal with so many things at once that they're getting lost in sometimes in figuring out, what do I need to focus on first and foremost. It's providing that critical feedback. This is also where we are setting expectations. So we all know entrepreneurs, founders are super optimistic people. Nothing wrong with being optimistic, but is it always realistic, right? And so setting the appropriate expectations, helping founders understand, the venture capital or the investing or the business building process is really critical in terms of their ability also to connect with partners. It's coaching, it's advising, and then it's most certainly connecting our entrepreneurs to the opportunities. That assumes that you have opportunities to connect them to. So one of your primary functions as a hub is to basically develop as many opportunities as possible that you can then use to link up your entrepreneurs. So on the right side, you're talking about the network that you build and you maintain those relationships. It's the expertise that you have within your team, and it's the opportunities that you're bringing to the table for your entrepreneurs. This is beyond the infrastructure, right? Of having a really cool space with great lighting, good internet. nice coffee, ideally some food close by, and all the other amenities that make it a nice place to spend your time. And increasingly, it's also for the hub to think about, okay, but actually, even if I'm in the business of supporting entrepreneurs, it's still a competitive space. And if I know that, the quality of entrepreneurs coming into my program is maybe the key success factor, how am I differentiating myself in the market? What is my unique selling proposition? How am I, building a distinct offering or a distinct program that is going to get visibility and a profile within the ecosystem? And why is that important? Because it's that profile that will also connect you to partners in government, connect you to the corporate sector, connect you to NGOs or other multinational organizations that see the work that you're doing as important and wanting to engage. And that brings in, again, events, resources, network, and opportunities for the entrepreneurs. But so here again, it's the expectations management. I just raised this because, the question very quickly is, how do I connect entrepreneurs to investors? I just want to pause there for a second and say, who said that is what you have to be doing? Where was that defined as the mission? Is that something that the entrepreneurs are asking? Is that something that you as a hub manager are asking? Or is that your funder who is asking how many companies have connected to investors? It's not that it's not an important question. It's just something that, I think we have to take a moment to think about in terms of what are we actually trying to do? What is realistic in our market? What is our market, right? What is possible within the space that we are operating in? And how are we going to think about success? So in terms of, what is the role that we can play? How are we going to fulfill that role? For who are we doing it? And, at what point are we achieving on our promises that we make? So it's just a question, a mirror that I put up for all of you. But so this is, again, I think when you have these ingredients in place and when you're focusing on this sort of basic set of building blocks, then you are able to further refine your recruitment and your selection process, which in the end is probably the single factor that will impact the success of your program. And then it's also about whether or not you have the right capacity within your team. So, hubs, it's very difficult to bring in quality people because quality people cost money. So if we don't have resources or we have a limitation of resources, how do we ensure we have the right people in our team to be able to do this work? So if we are making a promise to entrepreneurs or to ourselves or to our funders that we are going to be connecting entrepreneurs to investors, then we need to have certain skills and expertise in our teams. People who understand how to build a team for a startup, people who understand business operations, people who understand customer development and acquisition, people who are into data analysis, knowing cost of acquisition, how to develop margins. These kinds of insights and skills and expertise are absolutely critical in terms of developing a portfolio of companies that are going to be able to speak to the needs and the interests of investors. And at the end, they're looking for a complete package. right? So these are also the areas where your program needs to be adding value. It's on the product and the market side. It's in actually building not only the capacity of the entrepreneur, but the team that is driving the venture. It's very well known that investors do not like to invest in single founders. They like to invest in teams. Part of the reason is key man risk, right? If you only have a single founder and the founder gets sick, what does that mean to the company? Does it just disappear? That's not, for an investor, that's not acceptable. So you're talking about building a team. Legal is another big issue. So do you have partnerships with legal firms? Do you have legal expertise as part of your program? And are you able to help companies with contracts, term sheets, working through, the different documentation, licensing, regulations, things like this. It's operational excellence. And then of course, it's also in the finances. These companies have to have, polished statements and solid financial reporting if we expect investors to take them seriously. So, on one side, we're working with the entrepreneurs on process. They're going through due diligence, which means that all of their documentation has to be, in an accessible folder or file. Contracts. So if there are multiple founders, the contract that they have with one another, that has to be in place. If they are using technology or they have licensed something, that needs to be documented. All of those papers have to be stored in a place where they can easily be shared with investors. The entrepreneurs will be, if they get interest from investors, they'll be working through valuations, term sheets, the agreements and the closing, where on the right side, some of the documentation that is required. So starting out, right, it's really, I think thinking critically about to what extent companies are ready for funding, and then also asking the question, what kind of investor or what kind of funding are they ready for? Developing a plan with a timeline, right? Working with the founder to really think about how we are going to structure this. Building the pitch deck, so providing the feedback, on how they're positioning the fundraise, how they're going to use the capital, the size of the round, making sure the data room is prepared, that all of the documentation is on file. Helping with investor research. So if you've built a network, being able to also look into your network to understand who the appropriate people are to engage. And then, when you feel the entrepreneur is ready and the entrepreneur has fine-tuned their pitch, go out and test it, right? Get feedback, see how people respond to the company's story, and then come back to the drawing table and make adjustments and changes until all of the critical question marks have been answered. And it's a process of iteration. So every conversation is a learning opportunity to get feedback and to think again about how we can further refine and position the company. And that's also where, I think all of us have to be thinking long term. It's not about single conversations, but it's about relationships that we are building over time, and thinking about how we are building those relationships. So let's see here. We are 30 minutes past. I have another section about maybe reviewing the types of investors, the type of funding available. So we'll spend another maybe 5-10 minutes on this. So here you can see on the left side, this follows the previous sort of image I'd shown about this, where your angels, right? Here on the left, you have angels, and then you have the 3 F's, family, friends, and fools. One very difficult fact, what we see in companies that fundraise successfully is that the founders, there's more than one. 2 is that they have a master's or bachelor's level of education. 3, they're usually coming from an upper middle class background. 4, they have some money to put into the business themselves, right? Called skin in the game. So if you are working with a founder that doesn't have one of those ingredients, it doesn't mean that they can't build a successful company. It doesn't mean that they won't be able to fundraise successfully. It just means that they have to overcome additional hurdles. When you compare them to the entrepreneurs that raise, venture funding successfully. And so maybe that's a point for discussion, but also for you as a hub to be thinking about what that means and what your program has to look like if you're trying to compensate for some of those realities. I think you are probably familiar with the different types of investors that are out there in the market. Maybe just a few comments to make. The crowdfunding can be a way to bring money into a business. One challenge with crowdfunding is that a lot of what an investor is bringing to the table is not just the money. The money is only a small part of the equation. What the investor really is bringing into the picture is a wealth of experience, knowing how to build companies like this successfully, meaning that they also have extensive networks that they can bring to the entrepreneur in terms of connecting them to additional partners or to additional investors. So crowdfunding isn't necessarily a bad thing. Just realize that it's a different. Some people would say it's dumb money. It's just the dollars that people have contributed to a project, but it's not necessarily bringing that expertise and that network to the table. Corporates can be very, very interesting, but also, the way that they structure partnerships is quite a specific thing. And so having someone who has built corporate partnerships successfully would be really helpful for any entrepreneur that is, exploring that path or that avenue. It can take quite a bit of time. Corporates also, only want to focus on things that really have a strategic value for their business. So it is a path for some, but entrepreneurs need to be aware of what kind of time and what kind of commitment they're going to have to make in terms of realizing the partnership. Banks and debt financing, really you have to think about whether or not the company has collateral, whether or not they have assets that they can basically put on the table for some loan or debt financing. The other, I think, point here to think about is, startups, really any money they have, to some extent, you want to be reinvesting it into the business and into the growth of the company. And so debt, although it's a way to maybe finance some operations, you also need to think about whether or not that capital, repaying debt, repaying loans, that can be hard for a business that needs to be reinvesting those monies. Grants can be a great way to finance a company in the earliest stages. For example, with research and development, or maybe the startup competitions, business plan challenges, things like this. The only thing to be aware of and to be helping your founders understand are the conditions of grants. A lot of grants or social impact investors will have very specific KPIs. One of them can be around job creation. Creating jobs as a startup isn't your primary function. And sometimes creating jobs is going to be a problem for a startup because the last thing you want to do is be hiring more people than you need. So, you have to try and understand if what the grant and what the funder of the grant or the social impact investor, if what they're after, if that's truly in alignment with the business that the entrepreneur is trying to build. Otherwise, you could be getting yourself into trouble. And angel investors, which for many of you is maybe one of the go-to sources of capital. Here, I think you just really have to understand that this is, these are people who are investing their own money. It's dollars out of their pocket, right? A VC fund, they're managing, a fund manager is managing somebody else's money as a professional manager. An angel is vesting their own hard-earned cash. So angels can be, they can be a great source of money and network and expertise. But angels also come in all shapes and sizes. The reality as well is that, a lot of angels maybe don't have a lot of experience doing this. So sometimes they can be a bit irrational. Sometimes they make decisions that aren't always good for the startup. So really, trying to know your angels, being affiliated with an angel investing network, or even setting up your own group of angel investors. These are some of the things that you can do to help unlock these resources. And then, this is just where some of these investors would fit into, the spectrum of, where the company is and how the company is growing or developing over time. Here, I share this, there's more than 2,500 investors that are registered as part of VC4A.com. You can see in the right hand that 55% of the investors have less than 5 years of experience investing in African ventures. So a lot of the investors are trying to figure this out as well. It's not only the entrepreneurs, it's not only us, the hubs, but it's also the investors. And then if you look at the breakdown, 32% are angel investors. This is something that has emerged in just the last 3 to 5 years. So this is a new segment of investor that we haven't had in the market traditionally. The other one is, the social impact fund, which is 26%. I would say in 2013, 2014, that was probably over 65%. So the market, the type of money, the type of investors is diversifying, and we are seeing more VC funds and more angel investors getting involved in the business. And 34% of the investors report actually having achieved an exit, having been able to sell their company. So we are starting to see that this works and that people can actually make money doing this. When we ask the investors what is, the single most important factor that they take into consideration when investing in an early stage business, and it's the quality of the management team. Again, the word team, not single founder, but a team of individuals that are working to build a business. If they see that those individuals have complementary skills that are needed for building the business, that is the single most important point that they are looking at when deciding to invest. And I think this is just a really, useful model. I use it all the time with entrepreneurs. Entrepreneurs contact me every day, telling me how, wonderful their idea is. I've got this wonderful idea. A lot of entrepreneurs also saying, I can't share my idea with you because I'm afraid somebody's going to steal it. Things like this. What we're really talking about is execution. Ideas, although very, very nice to have good ideas, they mean nothing. An awful idea in this model is worth -1 points. A good idea is worth 10 points. A brilliant idea is 20 points. But if you have no execution, then your brilliant idea is worth $1. Good execution is worth $100,000, and brilliant execution is worth $10 million. So investors are not looking at the ideas, and as hubs, we need to be working with our entrepreneurs to help them understand that their ideas, as powerful as they might be, they mean nothing until it's actually implemented. And it's the depth of implementation, and it's the quality of implementation that is going to drive the company's valuation. Here, this is, I think, a reality that we all know, but there are certain places on the continent where there is a larger system. There is a greater density, and where you will find most of the companies who are doing things in the space of innovation. That's where investors will go, because that's where they're going to find the entrepreneurs, but that's also where there is access to infrastructure, there is an access to talent, there is an access to capital, there is an access to market. So if you are building a hub and you are supporting entrepreneurs outside of these established ecosystems, then you need to think about what that means. And you need to think about whether or not you're trying to get the world to come to you, or you have to come up with a model that can maybe feed these entrepreneurs and these companies into these ecosystems where these resources are available. And there's different ways to do that. All of these things, reality checks, we have to deal with these things. We can't pretend they don't exist. We can't pretend that they don't impact us, because they do. And we need to deal with them, and we need to think of ways to deal with them creatively. Just quickly, in terms of where investors are looking for pipeline and what your role is, organizing demo days, competitions, fireside chats, conferences, bringing smart, talented people into your space to engage and to share. These things can help put your hub on the map, help put your members on the map, and that's what's going to drive access to network and to resources. Any entrepreneur can register a venture profile on VC4A. Any hub can register a profile on VC4A. You can list your portfolio there. Part of what you need to be doing is making yourself visible, showcasing your companies so that people can find you and the entrepreneurs that you're supporting. And the investors, the information is out there. It's on VC4A, and it's in 20 other sources. So it's not hard to find. I think it's just really being very thoughtful about who we are engaging, who we are contacting, why we are contacting them, and whether or not we truly think they are a good match for our program. So do you see your companies in their portfolio? Have you talked to entrepreneurs that they have invested in before? Are those entrepreneurs of the same type as the entrepreneurs coming out of your program? Do they understand your vision? Do you see, being able to deal with difficult situations with these individuals? Is there a relationship there that you can work with? And there are many reasons why fundraising fails, but this is also where you can think about the kind of support that you're offering. Lack of transparency, I think, is a big one. Entrepreneurs not willing to be really, upfront about what is and what isn't. That's in terms of presenting yourself as an entrepreneur, but also in the documentation that you are offering people who are trying to understand your business. That transparency, that willingness to be transparent, if that's not there, then really all of this is not going to get us anywhere. Poor governance, right? Are they making reports? What's the quality of their financial administration? what's the quality of documentation. Entrepreneurs are also historically bad listeners. They just want to talk about their business, but they're not necessarily understanding who is the person on the other side of the table. What are they trying to do? What is driving their decision making? What are their priorities? And entrepreneurs, by helping them become better listeners, they actually could be picking up on these messages and these signals that they need to make